All right. Good morning, good afternoon, possibly good evening, depends upon what time zone you're joining us from. Please chat in. Let us know that you hear us all right. Just doing a quick sound check here. Checking to see you guys hear us all right. See my screen. It says inflection point trades. Excellent. Yeah, again, chat in where you guys are joining us from. I'm always interested. I think everybody's always kind of interested in it. Excellent. Few of you are alive and listening. Hey, listen, this is definitely live here today. There's a lot going on, obviously, in the markets. So Louisville, nice. Delray Beach, you're close, kind of close. Really, not all that close to me. Anyway, welcome everybody. Here, I'll even turn on the camera. So we're live. So welcome to my office here. I'm just making sure that everybody sees us just right. By the way, I have to get the screen just right here too, because I am watching screens on every side over here. So I'm using about 6 different monitors today. I have have not left the screens. Obviously, it's a fairly big day inside of the marketplace. So welcome everybody. Welcome to well, I'm broadcasting live from the U.S. Virgin Islands. I'm actually in St. Croix. This is where we live now. Made a pretty big decision, kind of throughout the course of COVID, and we got out. So we live here, probably about 7-8 months out of the year, back in Arizona for a portion of the year. But we're back on the island here just about a week. So welcome. Maybe we'll even flip the camera around at some point today, where you can see the beach. It's good swell coming in. I'm excited about the project. I'm also not leaving my screen here for a while. So a few informalities, and then I'm just going to jump right into it. Listen, I have a lot to cover today. I kind of enjoy doing this during live markets. By the way, people always ask that question, is this live? Does that look live to you? It's September 13th. We are 3 minutes after the top of the hour here. S&Ps are rocking to the downside. Just when you thought we could rally, we're not going to rally. Like this is not good. This is not good under any stretch of the imagination. To talk a little bit about markets as a whole, though, as we go along here. The the one aspect, though, well, I'll show you my trades. I mean, listen, one of the things I implore you to understand here today is I take a very, what I term, no holds barred approach. So if you're kind of curious, again, welcome everybody. As I was saying, my name is Don Kaufman. We're going to be talking about inflection point spreads here momentarily. A few things you should know right up front. When I say that I take a very no holds barred approach, I'll show you absolutely everything. Okay. I know that, there's this, there's that. People always say, look at my track record. Listen, okay, forget about a track record. You can look at my account. I will show you everything. That's P&L today. This is the account statement, profit and losses for an entire year. This is just one account, right? It's just one account. This account's up about 172,000. If you look at my net lick, you can see where I am on a, when I say net lick, that's my net liquidating value. This particular account has about $340,000 in it, which is up approximately $172,000 on a year-to-date basis. And I throw this at people right up front. I mean, in the first, 2 minutes, because everything you see over here, listen, I'm a trader. We're traders first and foremost, and that's one of the most important things. That's why people, come and tune into TheoTrade. This happens to be, by the way, the thinkorswim trading application. I'm also very, very active on Tastyworks. Today, obviously, I'm more monitoring positions today and looking for some possibilities, some executions later in the day. So I also I urge each and every one of you, feel free to ask questions throughout the course of today's presentation. I don't mind. Do you mind? Listen, I'm reading the chat in real time. I prefer that the questions come into the chat. I'm just reading them in real time. And if I do not, please, if I do not get to your question, I will. I'll hit every single question I possibly can towards the end of the presentation. Again, if you have questions about some of the positions that I'm in, well, that's what I'm going to talk about. Like this SPY position in here, this is all inflection point spreads, right? This is an inventory that I created. It's inflection point spreads. We've had an incredible track record, not just year to date, but really for over 2 years. We've had an incredibly solid track record. and today is no different. Again, I will show you in great detail exactly what we're doing. So welcome everybody. Somebody was asking an interesting question. Do I use charts on Tastyworks? So I'm going to be honest with you. So Rico, I'm just going to answer his question right up front here. I like this. I'm not a chart guy. I'm a quant. And here's a funny thing here on thinkorswim. For those of you that don't know this, I worked not only at thinkorswim, I was early days thinkorswim, and the entire charting package of thinkorswim reported through my group. So yes, I'm the guy that doesn't look at charts very much, but know everything there possibly is to know about technicals because it reported through my group. So one of the guys that built all the studies for thinkorswim charts works with us now. His name is Jeff Bierman. So I'll talk a little bit about Jeff Bierman as we go. He works here now at TheoTrade. We left the brokerage side of the business. So a little background on us. Anyway, let's get started. So welcome everybody. You are watching a TheoTrade presentation. Today we're going to be discussing inflection point trades, and it's a high probability income generating system. I'll discuss that. Obviously, let's get rolling here. So copyright disclaimer, this is mine, this is not yours. There's a huge thing on here. And I tell people this all the time. If you need to get a hold of us, email us. Our average turnaround time right now for an email is about 17 minutes. So that shocks a lot of people, but you can email. We use support@theotrade.com. By the way, put my name in the title and it'll go directly to me. We use a common inbox. We've been doing that for years here. The other thing I want you guys to know, we are located in the U.S. Virgin Islands. Is that weird? Yeah, a little bit, but this is a trading community down here. Risk disclosure up here. We're not financial advisors nor broker dealers, so I did have time in the brokerage industry. I'm out, baby. I'm out of the contest. I'm actually thrilled to be out of the brokerage industry. I left TD Ameritrade in 2015, and I'll tell you that in just a moment. All right, let's get right down to business. This is why you're here today. So we're going to talk about a strategy that thrives in the midst of extreme volatility. Is this extreme enough for you? Right? You're going to learn to embrace Federal Reserve interest rate chaos, and it is interest rate chaos. By the way, if you have no idea or you're just tuning in of why the markets are down so substantially today, there was a CPI, it's inflation report. It came out. It was hot, hotter than anybody really anticipated. And there's no way out now. The Fed has to just keep jamming rates up. So this is going to be interest rate chaos. You're going to learn to recognize bear markets and volatility can benefit even the most novice traders. Listen, I'm not here to talk about bear markets. I'm here to talk about much more about volatility. If you're concerned about risk, you're going to learn to cover yourself with a single strategy that's going to encompass its own risk reduction and monthly income. So what we're going to cover is how to create, a trade expressly to, on one hand, we're actually going to be generating monthly premium. On the other, we're actually going to create a floor under your positions, meaning that we are going to make sure that you are hedged in every way, shape, or form. If you're unfamiliar with the terminology of hedged or hedging, it's risk reduction, okay? Number 4 here is critical. Real capital, real trades, talk is cheap. You're going to see 18 months of inflection point trade results. I'm a very big believer. Listen, the buck stops here. I come from the brokerage side of the business. I've seen everything that you've ever done. I try to explain that to people and they don't get it. Like when I say the buck stops here, like, look, I come from not only the brokerage side of the business, but I come from a brokerage side of the business where we had the largest options order flow, okay, bar none. We had 300% more options order flow than the nearest competitor, okay, at my time, both at thinkorswim and TD Ameritrade. So I say talk is cheap. Look at my account, it's fine. Number 5, small accounts, retirement accounts. If you have $2,000 or more, you can potentially achieve results. I'm adamant that you understand everything I talk about today can be done with as little as $2,000. Everything I talk about today can be done in an IRA. You want to see? This is an IRA right here where the MES is. And I'll talk about the MES and why I trade it. That's an IRA, okay? There's no if, and, or but about it. You can route these trades inside of a retirement account. All right, number 6, you're going to find a monthly income strategy for your portfolio, and it's one you just can't live without. Inflection point trades is really, I think, what a lot of people have been looking for. All right, our gift to you. This is an auto expected move indicator. I talk about it incessantly. I use it all the time. It's a $500 value. Stay with me right to the end of the webcast. We will give you a link specifically to the auto expected move indicator. Just kind of curious. All right, I've got a pretty good number of people on right now. How many of you, okay, have actually used or played around a little bit with the auto expected move indicator? Right? Not a show of hands, just yes, no, Y for yes, N for no, right? If you have, and again, I love it when people have, because if you have, you're going to know like it's worth its weight in gold. I'm telling you, spend some time on this one, and I'll show you exactly what it looks like. By the way, I hate screenshots. Hate screenshots. This is a screenshot of Tesla. Who cares? Want to see it live? Here we go. Okay, we're going live. You go to something like Meta, and it's down big. How big? Like quantify big. So you use auto expected moves. Why do I use auto expected moves? I'm going to tell you exactly why. Okay, if you look real carefully, there are 3 lines on the screen. The central line, that's where the week started. Okay. By the way, if you see me looking around, I have a screen here, screen here, screen here, screen here, screen here, screen there. There's 6 monitors. Why? Because there's a lot going on right now. So this is where the week started. This is the upper and lower edge of the expected move. What it does and how it actually generates the expected move. It's handicapped from the option marketplace. This is what the option marketplace depicts risk to be. Look where we presently are. Okay, we're 2 times outside the expected move. This is what we term a 2 sigma move. If you looked at a deviation curve, okay, we're not in here. We're not in Kansas anymore. We're out here. It's 2 deviation move to the downside inside of Meta. Okay, in an instant, you can actually see that. And you're like, whoa, it's a statistically significant move. If you look at something like Tesla, okay, almost unimpeded. You get a real quick feel for this. Want to see Apple? Okay, take a look at Apple. Apple was way outside yesterday and got slammed back today. But you're getting a feel for, statistically speaking, what's possible, what's plausible. Want to see something interesting? The financials. This is the XLF, hit the lower edge of the expected move and bounced off of it. Pay very careful attention, because I'm going to tell you right now, want to know where the expected move in the SPX is? We're reaching for it, okay? Look down below. Watch out below, 39.70. 39.70 in the SPX. Look how close we got, people. Look how close we got. There's 39.70. We came within 8 points of it. We're not done yet. We're not home. So that auto expected move indicator, again, stay with me right to the end of the webcast. It's yours. Next in the docket, little housekeeping item. Listen, this is a skill set. I'm going to fly through a huge amount today. And again, totally no holds barred here. Phones on silent mode, close Facebook, turn off Skype chat, whatever else is distracting you. Okay. This is something that you're going to need to focus on, because I'm going to run through a huge amount. I am all about educating you on these presentations. You took the time to be here. This is important. Focus on being here. Here's a little background about me specifically. So I watched order flow for 15 years, for the better part of 15 years. And that's kind of what brought me here. People always ask how I got involved in this business. I grew up around it. I have a pretty, I guess, unusual upbringing. I have family that were traders in Chicago that started a trading firm back in the 1970s. The firm is actually called O'Connor & Associates. O'Connor & Associates to this day is one of the driving forces behind UBS. They sold the company in the 1990s for several $1 billion. So I was naturally inclined and grew up around trading. I got into this 3 weeks out of college, started trading in Chicago. About 2 years after that, I was invited to what was a startup brokerage firm. Nobody ever heard of it. It was back in 2001. It was called thinkorswim. So I was at this no-name brokerage firm at thinkorswim. And my job at thinkorswim was, number 1, help build trading application. And number 2, I ran all the education. I built the entire education, side of thinkorswim's business. I was there on the executive team when we took the company public in 2007. I was there when the company was purchased by TD Ameritrade in 2009. Kind of a fun story there. So in 2009, when TD Ameritrade bought us, I tried to leave. They signed me to a 5-year lockup clause. I spent, that was in early 2010 when I did the 5-year lockup clause. I exited in early 2015 to launch TheoTrade. That's kind of my background. A lot of what we discussed expressly here today comes from what we learned at our time at thinkorswim and TD Ameritrade. And I say we, there are many individuals that were with, me and worked in the same group at thinkorswim and TD Ameritrade that are now brought over here to none other than TheoTrade. Brandon Chapman, Blake Young, Jeff Bierman. Okay, these are all names that you may or may not be familiar with that were involved heavily early on in thinkorswim and of course TD Ameritrade now are presently here with me at TheoTrade. Anyway, what you're going to learn here today comes from literally watching billions and others' mistakes. We watched order flow. We learned a huge amount of what works specifically for retail traders. And that's where a lot of this education comes from. Let's get down to it. By the way, I still do, this is TD Ameritrade TV. I still do some spots on a weekly basis for TD TV. I do a spot every Wednesday. I will take some spots from time to time, obviously on CNBC. It's myself pitted against Kevin O'Leary. Okay, the short sellers take a bite out of Apple. Me, I was the short, he was the long, and I loved it. No, this actually it was a pretty momentous one because it's the last time Apple really tanked. I was short and pitted against him. All right. As I said, let's get down to business. Volatility has arrived, and it's not going to abate anytime soon. Now, this is not something I, just threw together in a moment over here. This is something, in terms of strategy, it's something we've been talking about now for 2 years. And what I do when I take you through this presentation today, I fine tune a couple things, add a couple of slides, but listen, what we have been doing and what's been effective and working has been working for 2 years. Volatility is here. It's not going to abate. When I say abate, it ain't going away. Bottom line. Number one, inflation is running red hot. I think that's an understatement. You do realize CPI came out today. Fed's going to push rates higher and contract the balance sheet. Okay, that's going to create constant volatility. Strong dollar exports inflation. By the way, if you haven't looked at the dollar lately, this is stuff that, I put this together a couple of weeks ago. The strong dollar. Stronger the dollar is, the more you're going to export inflation, the more risk we're actually going to take, and geopolitical risks right now are proliferating. So if you think that things are bad right now, you realize that that CPI came out with oil down substantially, gas down, natural gas down in terms of price over the last 6 to 8 weeks. Okay, imagine we get into a position where geopolitical risks start proliferating. Things are only going to get worse. Volatility is not abating. Okay, just game on. Just embrace the chaos. It's all you can do at this point. All right. Markets, they've gotten real in 2022. If you looked back at, the onset of COVID, there was a crash. Okay. The Fed basically took us out with the most amazing, display of liquidity ever in the history of markets. They threw basically, trillions of dollars at it. We're going to be mopping up from that for years. So if you threw any money in the market from March of 2020 into 2021, you probably made money. This is much more real. And we're going to be in the situation that we're in right now for a considerable period of time. Stock picking is dead. Okay. You can't pick a long or a short to save your life. And again, I like to make this distinction over here just to make sure that everybody, kind of stays in check. I'm going to show you. I think this is interesting. It's a 30-day 1 hour chart. Okay. Do you realize that last week, and again, my mouse is on it, last week, and I'm just going to zoom in right here last week, we were trading at 3,800. That's last Wednesday. Okay. Last Wednesday, we're trading 3,800. We traded all the way up, to almost 4,170, only to turn around and we're at 4,000 on the button. Okay. Nothing like a little road trip to the upside. You realize no one can sustain this. Like, if you got caught on the wrong side of positions, you're devastated. By the way, it doesn't matter when I was saying, oh, don't pick stocks. I think it matters. This is the S&P 100. Look, it's the S&P 100. Nothing's up. Okay. There's 2 stocks, Don. There's 2 stocks. 2 stocks Okay. Oh, Bank of Mellon, not Bank of New York Mellon, just Bank of Mellon and Oracle. And they're basically massively unchanged. There's nowhere to run to, nowhere to hide. Stock picking Reddit boards, I ain't going to cut it. This is not 2021. There's no meme stock. Okay. You're going to need a strategy. The number one embraces chaos and volatility. The more crazy it gets, the better you're going to do. Number two, you cannot rely on directional bias. Don't take this the wrong way, but if you think you can time these markets, you're out of your mind. There's not going to be a piece of software that can time the markets. No one knew that the CPI report was going to resonate that way. You realize that the Fed is also now going to consider 100 basis point increase. Okay, so you can't rely on directional bias. You got to embrace volatility, and you got to reduce risk while substantiating monthly returns. Okay, risk reduction is critical. I mean, listen, that's what we're in here. That's, embrace this chaos. What are inflection point trades? Because that's exactly what we're going to talk about. Higher volatility, which we're absolutely in. Higher volatility has resulted in significantly more options premium. This makes option pricing higher. Now, for those of you that are aware, maybe unaware, we're going to talk a little bit about options. I said the O word. Okay, relax. So we're going to talk a bit about options today. Even if you have no intent of trading options, I strongly suggest you pay attention, because I think you're going to learn a huge amount about why right now we're selling options and where that edge happens to be. So inflection point spreads are designed to quote unquote sell options premium, okay? And while reducing risk. How many people here have sold some options premium in the past? Okay, anybody? How many people here have sold options premium in the past? Okay. Because if you have, and a lot of people are saying yes, and again, I try to keep it, pretty lively in here. If you have, fantastic. One thing, there's a lot of risk. What happens to people when they sell options? They make money, make money, make money, make money, make money, and then all of a sudden, oh, did you get the license plate of the train that hit me? Okay, they get run over. And it's more or less because selling option premium is pretty easy. And, you can have like 90, 95% probability, but most people don't know how to deal with the back end risk of selling options premium. That's what we're going to discuss today. We're going to separate myth from real risk, fact from fiction. We're going to dig deeply into, what really makes this. Again, one trade, one hedge, one end goal. What's the end goal? Make money. I mean, that's what you're here for. I mean, look, we're going to learn to sell options. People hear this all the time through the grapevine. Oh, I've heard it's a great way to make money. Again, if you've experimented with it, and I try to reiterate this, okay? Because there's lots of people in here, they're like, I did an iron condor. And I'm like, oh, you're killing me. You're killing me, Smalls, right? Again, today's session, let's focus on some of the real risks. Back from fiction, we're going to get deep into selling options premium, but much more, appropriately, how to mitigate the risk when things do go awry. Because, sooner or later, you're going to wake up one day and look, the S&Ps are down. They're down big. So don't panic. You can do this. Some of you may know nothing about options. Anybody here willing to say, I know nothing about options? Okay, anybody? Anyway, I like that. Somebody's like, I got run over. I got run over in iron condors. If you know nothing about options, speak now or forever hold your peace. No, nobody here. Everybody knows options, okay? So if you do, listen, first and foremost, some of the things I'm going to talk about today, you're going to question me about margin. Don't question me. Don't you question me about margin, okay? After 15 years, okay, in the brokerage side of the business, I'll help you circumnavigate every margin requirement out there. So do not worry about margin. If you have $5,000 in a retirement account, you can do this. If you have $2,000 in a standard margin account, you can do this. But I want to make sure that everybody that does not have that options experience, okay, does not have it, then I'm going to walk you through a couple of basics. Those of you that have the experience, bear with me. By the way, there's already Claudia was coming in here and saying, you got to get approved. Okay, we have you covered. So after 15 years in the business, and we obviously broke away, okay, most of the crew here at TheoTrade, all right, we've held every license imaginable inside of the brokerage business. In fact, I've even had some of the Canadian licenses before. we are going to talk to you about where to get options approval and how we can help you get options approval. So it's not a concern. So margin, wipe it out of your mind. Options approval, if your brokerage firm doesn't let you do it, okay, we'll show you where you can do it. Let's dive right into this. Listen, there's a lot of facets of selling premium. When I say selling premium means selling options, okay? So what can you do? You can call it selling premium, you can call it credit spreads. There's a bull put spread and a bear call spread, and oh my, there's lions and tigers and bears. You got short call spreads, you got delta neutral trading, you can sell some premium, selling it naked. Listen, selling premium can be used to create both bullish and bearish positions. Generally speaking, though, we think of it, and again, expressly today, I think of it as market neutral. So all of these terms over here, selling spreads, selling juice. You guys ever heard the term juice? Juice is premium, okay? It's all facets of selling premium. By the way, how our members are doing year to date. In June, halfway through the year, I asked people, okay, from TheoTrade, how are you doing? Mark said up 190% for the year. Carla, up 30%. Big Tex, up 23%. Timothy, he was down $1,000, but he was new, and he would have been down a lot more had he not joined Theo, okay? Captain Vicky up 35%, RJ best year ever. I just want to give you a smattering. As I said, no holds barred approach here. All right, probability and profitability. Your trading is based on probability, okay? We can create trades, and we can, and I'm going to show you this right now. You and I, we can create trades all day long with a 90% probability of success and still lose money. Why am I doing this? Why am I telling you this? And I'm very like detail-oriented kind of an individual here. And when I say that, you know, we can create trades all day long, 90% probability, because constantly people come in and they chat in. And again, I'm looking how many people are on right now. There's a lot of people watching, and they chat in all the time. They go, what's your track record? How often are you right? Okay. The answer is like 90, 95%. We're doing 90, 95% trades. Okay. But I want you to understand that how often you're right and making money are two totally different worlds. You know, when you watch something like CNBC and there's a guy throwing a chair and he's getting all like excited about it, who cares? Like, who cares? Yeah, you go, but they're telling me that I should buy this. Who cares what they're telling you, right? Being right, being wrong, okay? That's not going to make you money in this business. This business is about risk. Okay, this business is not what people think it is. This business can be very mundane. You got to go out there and you got to strategize. You just got to crank out profitability on month-to-month basis, get back, reduce risk. This is volatility. You don't know anything in volatility. You sit back day to day and you know, okay, but when the ducks are quacking, feed them. Probability alone does not make you profitable. You got to remember that. If you're ready to sell options premium, okay, selling options premium is more than finding high probability trade ideas. Anybody can find a high probability. Anyone can find a high probability trade idea in a matter of seconds. You want to see? Here, we'll go to thinkorswim. Thinkorswim. Watch. I'm going to go right into thinkorswim, and I want a trade that has a 90% probability. Okay. I can just click on Amazon, click on the trade tab here of thinkorswim, close up that left side bar, go out 66 days. Just bear with me. Bear with me. Okay. Change this delta over here to probability out of the money. You know what that probability out of the money? It shows me the probability of an option being out of the money. Okay. By when? By expiration, which is 66 days from now. You go, I want to be right 90%. There you go. You're a winner. Winner, winner, chicken dinner. All I have to do is go out and trade this option. Okay. I am right 90% of the time. You think that's going to make you money? All right. High probability trading takes 2 seconds. And by the way, people always ask us about these probabilities. Every trading application in the industry now has this. Thinkorswim was unequivocally first. Okay. I mean, this stuff was built. Now, again, it's almost 20 years ago that we built some of the models for probability in here. So, all right. So what? You got a 90% probability trade. People, I'm telling you right now, it's not going to make you money. You got to do more than that. Right. So what we're going to do is we're going to teach you the inflection point spread, because it's a system to find, trade, and hedge in one transaction. You got to find it, you got to trade it, you got to reduce risk in it. Okay, find it, trade it, reduce risk. You have to have all of those factions together. All right, so let's get into it. Discovering probability and premium selling tactics. I'm going to take you through some basics and then walk you into the extreme. You guys ready? Okay. So for those of you that are new, if you're new, okay, what are you new? If you are new or newer, I'm going to take you through some absolute basics, and we're actually going to work you through some more advanced examples. You okay with that? So here we go. So I like to always start with like $100 stock. And again, I always call every stock, it's a fictitious stock. We call it stock. Okay. Why do we call it stock? Because it's a cool name, stock. And stock is trading in $100. Do I own the stock? No. Do I want to own the stock? No. Why do I not want to own the stock? Because stock is chaos, man. Like look at Apple today. Ruh-roh, raggy. Look at any stock today. It's ugly. Okay. It's ugly out there. So for the first example, I'm going to go out, okay, and I'm going to talk about a call option. All right. Let's say, for example, I was going to buy a 120 call. I'm going to buy a 120 call, and let's say I pay $1, and this would be a debit. Okay, what's a 120 call? Now, some of you are just absolutely brand new, okay, into options. So what's a 120 call? Well, the stock's trading at 100. Do I own stock? No. Do I want to own the stock? No. But I'm just buying a 120 call. If I'm buying a 120 call, I must feel that that stock is going to go where? Skyrocketing. Okay, skyrocketing. All right. The one thing I want to mention, and again, somebody's even talking about in the chat room over here, being long or short. That's no conversation in here. Don't care. Okay, your long or short position does not matter. It's not going to influence anything that we're going to talk about today. Let's say that you go out and buy a 120 call. If you buy a 120 call, you must feel that that stock is going to go where? Up, and up huge. I mean, if you buy a 120 call, for those of you that are newer, a 120 call gives you the right to buy the stock at 120. Do you have to buy the stock at 120? No. But if you have a stock at 100, okay, you buy a 120 call, that stock has to go up 20% just for you to do what? You're not even breaking even at that point. I mean, really? You need that sucker to like 130 to get, to really get rocking out there. So what are the chances of that even occurring? Anybody? Okay. Anybody? What are the chances of that occurring? Very, very small. Okay. So in the case of this first example, and again, I'm not trying to teach you how to buy a call. That's not the example over here, not at all. Okay. All I'm trying to teach you is to understand what is a 120 call. And a 120 call, categorically speaking, gives you the right, not the obligation, to buy that stock, okay, at 120. But if the stock were to jump to 130, okay, you have the right to buy the stock at 120. Everybody else in the world then would have to pay 130. Your 120 call would be worth at least $10. You go, well, who's going to buy it from me? If they don't buy it from me, you have the right to buy the stock at 120. You could sell the stock in the open market at 130. You'd make your $10 that way. The only point I want to show you over here is that this 120, that's out in the nosebleed seats. Okay, so instead of buying the 120 call in this example, okay, now we're going to move on. We're going to turn around and we're going to sell. Okay, a 120 call. We're going to sell a 120 call. When you sell something, you're going to collect, and I'm going to collect exactly a $1 credit. Now I'm going to put it down over here. So we're going to sell a 120 call, and we're going to collect exactly a $1 credit. Okay, let's say that this trade is good for 3 months. 3 months. You sell a 120 call. What have you done? You go, wait a second. I'm new to this. I'm new. What are you new? I am new. Okay. And if you're new to this, maybe you're not familiar with selling options, because selling options seems so weird. Number one, how do you sell something you never owned? You're selling yourself into an obligation. Every time you trade an option contract, okay, doesn't matter whether you're a buyer or a seller. It does not matter whether you're a buyer or a seller. Every time you trade an option contract, okay, there is someone on the other side of the contract. Basically, okay, every single contract has what? One buyer and one seller. I'm going to say it again. Every single contract has what? One buyer, okay, and one seller. I'm trying to fix my screen over here. Oh, perfect. Okay, every single time that you do a trade, there's always going to be a buyer and a seller in every single option contract. You could be a buyer of a 120 call. Buyer of a 120 call has the right to buy the stock at 120. The seller of the 120 call has obligations to give somebody stock at 120. So I'm going to go out and I'm going to open my transaction by selling a 120 call. Okay. Now I've obligated by selling the 120 call, I've obligated myself to do what? Okay. By selling the 120 call, I've obligated to give somebody my stock at 120. Do I own any stock? And you go, no. So wait a second. If I'm selling a 120 call and I don't own the stock, what am I selling it? I'm selling what's called naked. Is that smart? Probably not. Okay. But I need you to understand, conceptually understand this example. Why do you have to understand this example? Because if you sell a 120 call, you collect $1. But then you're like, are you serious? I have to wait 3 months to get $1? Okay. It's not that bad. All I want you to understand is look how far out of the money we are. Okay. Like this is the nosebleed seats. We are 20%, what we term out of the money. We're 20% out of the money. That means, this stock would have to rally 20% just to feel threatened. Okay. And you're like, well, we're in a down market right now, but what if we rally? What if we rally? Okay. I'm not going to go out and just sell the call naked. Well, if we rally, I'll be there. I'll be ready. Okay. But here's the bottom line. This trade, this is what I want you to understand, conceptually speaking. And again, this is all about concept. Don't worry about margin, because everybody goes, what about margin? And then, of course, there's always one that goes, my brokerage firm won't let me do this, okay? Because they say I need training wheels, okay? Don't worry about any of that, okay? I need training wheels. See that right there? The sell of the 120 call, okay? What I want you to understand is this. From a probability point of view, how high do you think the probability is? You tell me, how high do you think the probability is? Anybody? These are not rhetorical questions. You can throw any number in there. I don't care. What's the worst I'm going to say? Huh? You're wrong. Oh, Okay, 80%, much higher, ridiculously higher than that. Okay. So nobody wants to answer this one. Hey, these are not rhetorical questions. Okay. You can just go for it. All right. What's the worst that's going to happen? You're going to be wrong. So this trade has over a 95% probability associated with it. And you go, how can you see that? Price and time factor into probability. So we're going to create trades at anywhere from a 90 to a 95% probability. Why? Okay. And I'm going to take you back for a second, and I'm going to unwind some stuff in here to make this a little easier to see. What I want you to understand, okay, is that you're selling something that truly is 20% out of the money. If the stock stays flat, do you make your $1? Yes. If the stock goes down, do you make your $1? Yes. If the stock goes up, do you make your $1? Yeah, most of the time. If the stock gets to 110, do you make your $1? If the stock gets to 119, do you make your $1? Yes, you do. You might wet yourself, but you're still going to do it. The only time you start losing money isn't even at 120. You start losing money at 120 plus the $1 you collected, which is 121. Traders of a 90-95% probability in there. Again, that's why we do it. Now, time out for a second, because I'm going to do this in a couple of different ways. Now, when you sell options, every day that passes sees the dwindling of options premium. As time passes, the options that you sell, okay, decay exponentially. How many people have heard this before? Okay. How many people have heard this before, that when you sell options, they decay that way? Almost everybody. Everybody's like, yeah. In fact, then they show you this decay graph. They go, oh, yay, I've seen a decay graph. Okay, so have I. And I'm going to tell you something very interesting about this decay graph. All right, you want to know what you're doing in here? This says the closer you get to expiration, the faster the options decay. Let me say it again. The closer you get to expiration, the faster the options decay. So some genius gets into a Reddit board and says, you guys, we should sell options that are very close to expiration, and that way the options will decay rapidly. Okay, this is absolute lunacy. Okay, they're completely full of crap, and the actual decay graph is completely wrong. And you go, what are you talking about? That's been one of the mainstays in option trading. Sure, I know. Okay, I've been involved in this business for over 25 years. Okay, I know that, but we're not actually going to trade on that one. We're going to sell options fairly far out in time. Okay, again, you're going to see in my example that I sold options a few months out in durations. Typically, traders sell short-dated options, but that's why people tune into this webcast. Okay, anybody could have figured out, let's sell something with a 90% probability. How about this? How about I sell something with a very high probability, buy it back inside of 30 days, okay? And we make a pretty good return, okay? And the market never gets anywhere near us. Let's do this again, okay? Now we're actually gonna do it in a live market. So I'm gonna go out in a live market, okay? In a live market, and I'm gonna sell a call, okay? And let's say I sell a call for $1. Just bear with me. I'm gonna make over, okay? I'm gonna make over 50%, and I'm gonna do it in 30 days. Now you interested? Okay, I'm gonna make over 50% of that dollar, and I'm gonna do it in 30 days. That stock will never have a chance of even getting close to us. Let's actually show you exactly how to do this. This, okay, this is what you wanna learn. This is inflection, okay, trades, all right? And this is inflection point trades. So we're gonna come in here. I'm initially gonna go into the spiders. Why am I using the spiders? It's probably one of the most marquee products. Everybody's kind of familiar with spiders. By the way, I've got all kinds of positions in the spiders. I don't want to freak anybody out, but I carry a lot of positions in the spiders. Nothing too crazy today. Okay, I've got some positions in here. It is what it is. The markets, though, are tanking today. And look, I've sold a bunch of puts in here. Look, I've sold quite a number of puts in here. There's a 10 lot of, naked short puts. I'm up $200. So the market's tanking. I've sold naked puts. Bring it, baby. I'm good for it. The reason I'm using the spiders, if you look at today's option statistics, they've already traded 5.5 million contracts today. Is that liquid? Basically the most liquid product. There's nothing that's even going to come close to trading that many contracts in the marketplace. So let's go out. And my first example, I'm going to go 94 days out. And what I'm going to show you here is a very high probability trade. I'm actually going to throw delta in here, and here, done. Let's just look right here at these 460s. So in the first example that I'm going to give you, and this is a live example, all right? Obviously, this marketplace is moving. I'm going to go out, okay, and I'm going to sell. Let me change the color here to make it even easier to see, okay? Here we go. I'm going to go out and I'm going to sell, okay, a DECE 16. This is the December 16th expiration. It's 94 days out. And I'm going to sell, okay, a 460 call. C is for call. And I'm going to collect here. Let's just sell it right at the bid, which is wrong, but whatever. Let's say we collect, okay, $1.10. Now, time out for a second. Let's assume we filled. By the way, we would fill guaranteed right now because it's $1.10 by $1.11. So I sell the 460 call, okay, and that's it. That's it. I'm out of the contest. No. So I sell a 460 call. Then what do I do? Let's sit tight for a little while and see what happens. Okay, do a little dance, make a little love, get down tonight. Okay, fast forward exactly 30 days. Just bear with me on this thought for a second. Okay, and here people are already coming in. Schwab does not allow me to sell calls. Good. Don't worry about that. Okay, that's not at issue right now. You know why Charles Schwab doesn't allow you to sell calls? Because they don't want to actually have any risk on them, right? Because attorneys run the firm. It's TD Ameritrade now too. So I go out and I sell a 460 call and I do nothing, okay? I'm going to wait 30 days. Assume that we're going to fast forward 30 days. What I'm going to do is I closed up this 94-day expiration. Then I'm going to open up this November with 66 days. Why? If you want to know what a 460 call is going to be worth, approximately 30 days into the future. Okay, what is 30 days into the future? Well, if you had a 460 call here 94 days out, wouldn't it be the same as like a 460 call with 66 days? See, people, what they don't understand right now is decay, option decay and volatility has shifted. There's skew, okay? And what an inflection point trade has to do with, it takes advantage of, all right, the shift in skew, the shift in theta decay. Just bear with me on this thought. All factors being equal, if you went from 94 days to 66 days, how many days are we passing through? You guys tell me, how many days are we passing through? So I'm going to look at a 460 call with 66 days left. How many days are we passing through? It's exactly 28 days. So we're going to go in here and we're going to say, let's just say the market stayed flat. I know it won't stay flat, but let's say it stayed flat. Okay. And exactly, okay, 28 days from now, I'm going to buy back my 460s. Okay. So I'm going to turn around and I'm going to buy, okay? There's still the Decembers, and I'm going to buy back the 460 call. What's it going to be trading for? Let's say 47 cents. Okay, you know what? Screw it. I'll just round it. Okay, I'll round it. With commissions and everything, I'll pay 50 cents for it. What am I up? Okay, I'm up basically what? 60 cents. How is that possible? You were told that decay didn't work that way. You were told that the best parts of decay come in the last few days or the last month of expiration. That couldn't be more of a fallacy right now. People have no idea what they're talking about. Decay has actually shifted, but it's not the kind of decay that you think. This is actually out of the money. Out of the money options have a very steep decline, okay, in volatility. It's actually, it's a phrase we use called ultima, okay, but this inflection point spread, what it's going to do is it's not just going to go out and sell premium and make, by the way, you're going to make between 50 and 60% in less than a month. So what you do is just go out and make 50, 60%. You don't have to hold an option, okay, more than 28 days. So the craziest thing of this entire logic over here, you go, why don't I just sell an option with 22 days? Well, why would you? If you sold an option with 22 days, okay, look at the options with 22 days. Okay, what are you going to sell out here? Oh, you're going to sell like a 428. You realize if the market rallies, you're done. It's going to kill you. Okay, you know, if you're out here 94 days out, okay, look how far out of the money. We're in the nosebleed section. We're all the way at the 460s. Bring the pain. That is 60 points higher in the S&Ps. 60 points, actually 61 points higher in the S&Ps, and you don't even touch me. Okay, bring the pain. Who cares? Think about this. I'm holding the trade, all right, for less than a month. People go out there and they sell options for a month. They still have to hold the trade for a month. I'm only holding my trade for a month. I'm able to make over 50%, okay, but the market can't get anywhere near me. All right, does everybody understand where I'm going with this? Okay, so I always ask the question, the first time people see this, I go, why aren't you doing this right now? You go, oh, it is interesting. They go, well, because I can't sell options naked. That's not an excuse because I'm going to show you how to do that. But I don't want to sell naked, Don. Okay, that's not an excuse either because I'm going to show you how to hedge this. The one thing you have got to think about with these premium selling tactics, right? People don't understand how to dial into the right option. By the way, it's not just the spiders. Come on. You can go into like the QQQ. Let's go to the Qs, go into the Nasdaq. I'm just using marquee products. Let's go into the Nasdaq. Let's get crazy. Let's go 94 days out again. Same option kind of thing. 94 days out. Look, here's a 360. Ironically, and by the way, I'm just trying to stick with nice round numbers at around a buck. So if I sell, watch, if I sell the 360 call, and this one again, it's for December. It is the December expiration. Sell 360 call. Let's sell it. This one I can easily sell for what? $1.06. Okay, easily for $1.06. So I collect $1.06. What would that look like exactly 1 month from now? Fast forward 28 days. Okay, look at the 360s. Here's the 360s right there. Okay, I could turn around and buy those back again. I could turn around, buy them back for how much? Oh, basically, I could buy them back in the open market right now for 45s. I'd be making close to 60%. Okay, I'd be making about 60% in less than 28 days and not taking a tremendous amount of risk. I'm telling you, right? This is what you want to learn. People are asking the right questions. Are you picking this because of the 7 delta? Maybe. Okay, what do you think we're about over here? The thing that like people don't get about like what TheoTrade is, people could have figured out a couple of these, but they can't figure out the criteria. That's what we do. What we do here is criteria. When I say criteria, again, you notice I'm going a couple months out. It's not just about duration. It's about duration. It's about dialing in the exact option to sell. It's the exact option to sell. Okay. Now, sounds pretty good so far. Yes. Are we okay so far? Now, how many people here are concerned about margin? Who here is concerned about margin? Because we're going to ice this cake a little bit and we're going to talk about the good, the bad, the ugly. Okay. There's a few things people are concerned about. Number one, they always say, I don't have the money to do this in my account. Or number two, they go, I have an IRA and I can't do it in my IRA. Right? Anybody? Okay. What are you guys concerned about? You tell me. Hey, I'm reading the chat right now. You tell me, what are you guys concerned about? I'm admitting it's the first step. Questions are okay. IRA, you can do whatever you want. Now, I'm not going to tell you that every brokerage firm will let you do whatever you want. Not every brokerage firm is going to let you do this, right? This is an IRA right here. This is Tasty Works. In fact, I'll isolate to that particular account. So that is an IRA right here. Whoops, I apologize. Okay, that is my IRA, and my IRA, okay, has none other than a naked short option in it. By the way, this is a 4680 call, and I'm up 29% since inception on that call. Okay, so I go, well, why are you at Tastyworks? Because Tastyworks actually allows you to do anything you want inside of your IRA. I'm not comfortable. Move a small amount of your capital. It's fine. It's up to you. Okay, but there's a few things I want to teach you. Number one, okay, margin is not going to be an issue. Why is margin not an issue? Okay, /ES /MES. Okay, what are those two products? These are what we term, okay, options on futures. You know why we trade sometimes options on futures? Some people are like, they just don't know. By the way, the ES is pretty much the same thing as the spiders. So the big ES, this is exactly 5 times the size of a spider. This MES is the same thing as a spider, but it's exactly half the size of a spider. You go, what? So this MES contract right here, okay, it's like a little pipsqueak. It's awesome because look, that's in an IRA. It only ties up $940 in margin. If you have a $2,000 account, you can do this. Pretty cool, right? Okay, I just wanted to bring that to you into the equation. Want to know something else interesting? See that MES? There's no day trading margin rule. Okay, people go, "Bah, I'm not a day trader." Okay, neither am I. But if you want to be a day trader, you could. You just trade the right products. There's no margin restrictions in here. You can do what you want. By the way, in a margin account, this will only tie up $500. Okay, in margin. That's only going to tie up $500 in margin. So I try to hit upon where everybody gets caught up. Okay, so think about this. You're like, but you're selling options naked. No, we're going to explain that in a minute. I'm not going to go out here and just leave you like naked because I'm not comfortable with that. I spent, again, 15 years in the brokerage world. The buck stops here. Like I know what works and what doesn't. And if you want to trade high probability strategies can lead you down a very dark path because you're making money. All of a sudden, the world falls apart like a day like today. Okay, you're not making money anymore. You're getting absolutely killed. We're not going to leave you with that. But I wanted to leave you with the impression before I even go down the road of how to hedge. Okay, we're going to talk about how to hedge. By the way, yeah, somebody said, but you have to have a broker. Obviously, it allows you futures in the IRA, and a lot of them do. Just so you guys know, okay, rumor has it that over here at TD Ameritrade, which belongs to Charles Schwab, if you do have the right amount of money, I think you have to have $25,000 now. They're letting you actually trade options on futures in the IRA. Okay, pretty cool, maybe. Okay, I haven't really done that yet. And my day is about to get better. Okay, the 4,000 looks like it's going to get broken. Anyway, with that, I think it's imperative. I like to go head on into this. Everybody is worried about this, they're worried about that. And I'm telling you, right now, you don't have to be. What you do have to worry about, though, is risk. Okay, I don't want to leave you with the impression that I go out and sell an option naked, wash my hands and go on. So let's move forward. You guys ready to move forward? Okay. Anybody? Because what we're going to do is I'm going to teach you to sell option premium, get out. Sell option premium, get out. In fact, when I talk about, my account and I say like, hey, I do this and do that. Listen, buck stops here. You want to see the account? These are some of the positions I have on. This is in one account. I'll show you the positions in the other account. This is what we call the TheoTrade portfolio. Okay. What is this designed to do? Nothing but make money. This is nothing more than inflection point spreads. These are inflection trades, and there's a conglomerate of inflection point trades in here. But the reason I want you to see this today, and again, I do not want anybody, okay, to believe that these are big trades. This is not a big trade. This in the ES, look how many contracts I've traded. 1, 2, 3, 4, 5, 6. There are 6 ES contracts in here. Okay, I am tying up $9,000 in margin. Is that a big trade? I venture to say most of you have much larger trades on than that. Markets are absolutely tanking today. That one position is up $312. Okay, I'm not going to sugarcoat. Is that good? I've seen better, but it's not that big of a position. And Here's the best part of the position. Want to see the best part of the position? See this put right here? That's naked. Naked. That one's naked too, but they have a hedge. Okay. I am naked puts, meaning that Don went out and sold stuff naked, but I'm hedged. And because I reduced risk, I'm actually up, not down today. And you go, that's insane. Want to see this other one? Okay. Take a look at this other position here on the spiders. The spider position, all right, that's a bigger position. You know, it's getting up there. I am short, naked short, a 10 lot in the SPY, but I have a hedge on. And the hedge, okay, has risk reduction. What am I up? I'm only up $176, but it sure beats the hell out of getting absolutely pummeled, because this is where people get killed. You guys understand what I'm saying over here? Okay, let's do it. All right, so criteria, it's what we do. Now, 90% probability and the 10% hammer. A lot of people that sell options premium, okay, this is what happens when people sell options premium. So they make money, they get killed. Most of you actually learn to sell options premium through a strategy called iron condors. And again, I was asking this earlier, but again, how many people here have traded some iron condors? Just Y for yes, N for no, okay? And again, it's in real time, I'm watching. All right, so a lot of people have traded iron condors. For those of you that have no idea what an iron condor is, here, let me give you the iron condor, all right, in a nutshell talk, okay? Iron condor in a nutshell. See, the iron condor does this. Here's the market. You sell some calls, that's calls, okay? You sell those. Then you turn around, these are calls, and you buy some calls. Then you turn around, you sell some puts, and then you turn around and buy some puts, okay? And the trade is designed, okay, to stay in the range, okay? Stay between the lines. Stay between the lines. Does the market stay between the lines? Maybe. So what happens is people go out and do the iron condor. They take a class and they pay $500 for the class and they learn to do an iron condor, okay? The mighty iron. The mighty iron. And the first time you do the iron, they're like, hot damn, I made some money. And they do. People make money on iron condors all the time. But they didn't think to themselves, did you know that the iron condor that you did probably had like a 90% probability? You go, what? Yeah, the iron condor that you did, you went out and sold a $10 wide spread for $1. That's about a 90% probability. Okay, so iron condor number one, you did it. Where'd you do it? You're like, I traded my iron condor where? In the spiders, okay? And the very next month, you do it again in the spiders. But the next month in the spiders, okay, you step up into the spiders, you go, I'm going to do a five contract trade in the spiders. So then you sell the iron condor in the spiders in month number two, okay, boom, you make money in month number two. And you're like, this is easy, man. I did, one contract the first month, 5 contracts the next month. Before you know it, yeah, you're not trading spiders anymore. Now what are you going to trade? Come on, people. Like, seriously, admitting it's the first step. Don't you lie to yourself. I know where you're going, okay? Everybody goes the same place. You go to the S. That's what they call the SPX. You know what I call the SPX? The mother of all products. So then to go to the SPX. For those of you that don't know what the SPX is, okay, it's the last place you'll ever go. Because the SPX, again, is the mother of all products, better known as the Widowmaker. If there's a product on this screen that I know the best, it's the S. How do I know the SPX so well? Because that's where we traded. When I say we, when we started thinkorswim, we made markets in the SPX. We know everything about the SPX. We are SPX, okay? There's no hedging around this. So the SPX, you go in there, you do one contract on month number 3, boom, you make money. On month number 4, you're like the Warren Buffett, you're showing your stuff, squawking your feathers. You step up, you do 10 contracts in the SPX, pow! Market moves down 150 handles in one day. You get completely decimated. Not only do you lose the money from the previous 3 months of profitability, but you lose half your trading account at the same time, okay? And every time people hear this, they go, holy crap, it's like that guy could actually see my account. I could, okay? I had access to everybody's account. I think I haven't seen this movie before. I make money. Did you get the license plate of the train that hit me? Okay, people, you get killed. You can't survive doing that. It's not a hedge. An iron condor becomes lunacy, especially in this marketplace. So then by the way, how many people have had that happen to them? Oh, come on, just admit it. Okay, anybody had that one happen to them? I'm reading. So you lose 50% of the account. If you're lucky, you lose 50% of your account. The unlucky ones go, that's it, that's a wrap. You lose 50% of your account. And then you go, I'm gonna take me another class because clearly I'm missing something. So you pay another $500. And that next class you take is they say, you can fix anything. Oh, I hate this. Okay, seriously, I'm gonna go on a tangent for a second. If anybody tells you they can fix something like broken in the marketplace, okay, run. Don't walk, run. Because I'm a total cynic about fixing. Fixing is a bunch like they don't call it fixing, they call it morphing. So if you have an amalgamation of crap and you spin it around, it's still an amalgamation of crap. 15 years in the brokerage business, okay, you learn something about fixing. And forget about the market making experience. Fixes may work, but the very notion of fixing is throwing good money into an already piss poor trade. Sorry to be so literal about it, but I hate it. I absolutely hate it. Fix is such a dirty word because there's no way to fix anything in this business without more risk and more transaction costs. Look it up, try to figure it out. Can you fix anything? Can you fix anything, okay, without more risk and more transaction costs? I've seen people triple their risk to try to save a trade. And I'm like, that's brilliant. You only had $10 of risk and now you have $30 of risk and sometimes $40 risk. It's awesome. Throw it out like yesterday's trash. You know, fixing a bad trade is like taking a car and driving it off a cliff. And then you bring it to a body shop and they're going to go, what the hell is that? I'm going to say the same thing about your trade. You got to learn to do this right. Okay. Listen, we need a hedge in order to sell premium. The one thing that I really, there's a reason I have Porky Pig up here. Okay. There's a good reason for Porky Pig, but you need a hedge. You can't operate without a hedge. And the way that I always think of a hedge, what is a hedge? It's a sacrificial lamb or sacrificial pig in this case, but it's a sacrificial lamb. If you don't hedge, okay, you will not survive this business. Hey, I don't care what you think. I've been doing this long enough. If you do not hedge, you cannot survive this business. Okay. So what is a sacrificial lamb? Like, every couple of weeks, you walk up to a volcano and you throw the lamb in the volcano. I know there's some animal lovers and they're like, why do you have to do it to a lamb? Okay, because it tastes good. I'm just kidding. No lambs were hurt in the making of TheoTrade. Anyway, you have to, I guess that's the way that I just logically think of it, right? So you take this lamb and you chuck it into the volcano. Why? To not anger the beast, okay? So you can't go out there and just, sell a naked call. You can't just sell a naked put with no hedge. Okay, you came into this trading world naked, okay, but now you need a hedge. Selling naked puts with no hedge, no one ever questions the naked pig. Porky Pig is naked till he's served up for dinner. We need a definitive downside hedge in order to sell out of the money naked puts. However, okay, we need to make up the cost of the hedge. Like the cost of the hedge has to be reasonable. Enter the inflection point spread. What is an inflection point spread? I'm going to show you. Okay, that's what you're here for right now, is to learn the inflection point. So let's get down to business. What is the inflection point spread? Like, here's the bottom line. Bottom line is I want to sell some premium. Okay, I want to sell some premium. Let's say that this is a stock. And by the way, let's make this stock $400 and let's call it the SPY. Is that reasonable? Where's the spider right now? Oh, it's at 400 on the button. Okay, so the SPY is at 400. I'm going to go out there and I'm going to sell the 460 call. I'm also probably going to sell, okay, 470 call. Let's say I collect $1 on this one, and here I'll collect $1 on this one. By the way, simultaneously, I'll have positions down here too. What am I going to have? Okay, well, I'll go out and sell, for instance, a 300 put. Puts are worth a lot more. Puts are going to be worth like $2. Before you know it, maybe I'll probably also sell. Okay, I'll just give you an example. A 290 put, and that one will be trading for like $1.50. Just making a quick point here. So where am I selling? Okay, I'm selling in the upside of the marketplace up here, but I'm also selling in the downside of the marketplace. Okay, but what's the problem inherently with this? Okay, I'm going to tell you exactly what the problem is. One day you will wake up and the spiders are going to be angry. One day you're going to wake up and a CPI report's going to come out. And by the way, this morning, okay, the SPYs were up here, slammed back down. okay? And if the SPY keeps coming down very rapidly, what's going to happen to these puts? Anybody know? Okay, you're dead. You're dead. That $2 put is going to explode to 20 bucks. It's going to be all in your face, and you're like, oh, it's just going to be hideous. You cannot survive the onslaught of volatility. You absolutely unequivocally will need a hedge. Okay. And I want to show you what it looks like in the marketplace. Like, listen, I have no qualms about showing people like why it's so important. Look, we're at the lows of the day. We're down 3%. The Nasdaq's down 4%. There's 2 hours left to play in the period. None of the inflection point spreads that I have on, okay, are taking heat. The bond position is not an inflection point, okay? Inflection point is ES, inflection point right here, okay, is spiders. Neither of them are taking heat in the marketplace, okay? It's down 3%. I'm not taking any heat. I think that kind of speaks for itself. But what I want you to see is look how juicy the market is on a day like today, okay? We're going to go into the spiders, and I'm going to open up the 94-day options, okay? Forget about this left side. Let's close up the left side bar. Okay, we're going to go look. You can see I've got positions out here. So I wanted to show you how juicy the market is. Woo, woo. Look at that. 94 days out, a 310 put is trading for over $2. Okay, honestly, I am a little excited about that. And I guarantee you I will be selling some volatility. As this marketplace starts to come into that last hour, I'm going to sell some premium in here. Why? Because it's hot today. Right? And you think to yourself, well, like the volatility, okay, stop looking at VIX. VIX is barely moving today. This back month volatility, though, is rocking. This thing is rocking, okay? I'm actually excited to sell some premium today, but you can't just go out there and sell this naked. Because if you sell it naked, you sell a 310 put naked and this marketplace collapses in the next couple of days, okay, you're toast. You're toast. You will use an inflection point spread, right? What does the inflection point spread do and how is it constructed? Okay, as I said a moment ago, and I'm going to say again, right? You must do what in order to sell puts? So again, here we have the SPY, and I'm going to be very, very clear about this, right? This is Spider, and it's trading right at 400, okay? I want to go out and I want to sell that 310 put. And I definitely want to be able to collect, okay, the $2.10 it's trading for, okay? But sooner or later, I'm also going to be able to sell, for instance, some 300 puts, and those two will be trading for around $2, okay? I'm just going to focus on the puts for a second, so hang with me on this thought. What would you do, though, if the market crashed? You're toast. So enter, okay, the hedge. What we're going to do is we're going to lay an inflection point hedge right in here. And what this basically does is as we come ripping to the downside, you have to pass through the hedge to ever be able to take a loss to the downside. What the inflection point does is it literally has a crossing over point. Markets can crash, okay, fast, hard, 13+%, okay? You'll be fine throughout the crash. Absolutely fine. I'm going to build a trade right now. I'm going to show you what the inflection point looks like as I build it. And I want you to understand that even a severe crash in the marketplace, okay, you're going to come out. You must pass through the hedge to ever take a hit financially, okay? And as you start crashing in the marketplace, maybe you can only look at the market every couple of days. You can get out of this. It's not a problem at all, right? We cannot operate without our hedges, but the hedges allow us to go out and to sell premium. It's kind of like, I want to make you into the Amazon, if you will, of selling options premium, right? When I say Amazon, I mean, like, what is Amazon all about? Amazon's about running through inventory. I want to go out, okay, and I want to sell, and I have no problem saying this. I want to sell a bunch of junk out here, and I want to sell a bunch of junk out here, okay? But I can't operate without hedges. Like, I have to have some type, oh, nice, I just filled. I have to have some type of risk reduction. By the way, just to show you what I just filled on, okay? I know I'm deviating here for a second, but I know exactly what I filled on. I just bought back call, okay? This is a call, the 4,800 calls. I just bought them back for $550, just to make a quick point, I'm going to cruise to my account statement. I'm going to type in the /ES. Okay. If I type in the ES, I just opened that call, 4,800 calls. I opened from $11. When did I open them $11? Yesterday. I sold a call yesterday. What did I just do? I closed it today. One day, I made what? You can see it. It's over 50% inside of one day. Okay. That is gold, Jerry. It's gold. This is huge. I mean, again, you're seeing it like in real time because the marketplace is moving. This is the kind of volatility. You can't ask for better than this. I'm only trying to make 50%. I don't mind saying that to people. Make 50%. I'm out of the contest. Okay. I just book some profitability and you're like, well, okay, is that a lot of money in there? Yeah. I mean, listen, it's decent profitability for a day that the market's getting absolutely slaughtered here. I'll take what the defense gives me. So I'm going to go through and I'm actually going to show you an inflection point spread. I'm going to show you what it looks like. Okay. Delete that trade out completely. I'm going to show you what it looks like, and I'm going to build this, all right, in very, very fast timing over here. Let's go out here to weekly. Bear with me as I bring up a couple of different expirations. Okay. I like to do this, as I said, let's do it, ad hoc. I'm going to build it as I'm actually talking about it. So I'm actually going to go ahead and build. We'll do the 380, for instance, 370. We'll drop that spread over to here. We'll go and analyze that trade. Excellent. Okay, at the exact same time, I'm going to go ahead and just, I'm going to sell. Okay, let's go out over here to this little monkey right here. Yeah, that's that 310 put I was talking about earlier. Let's go over here and analyze the trade. Okay, ladies and gentlemen, welcome to the inflection point spread, where, okay, what you're looking at right now, okay, happens to be the risk graph. And I'm going to just dial it in for you. Okay. First and foremost, can you lose money on this trade? Of course you can lose money in this trade. Okay. You can lose money in this trade. What I want you to focus on though, this is just, okay, this is just one unit. And what the one unit shows you is, look, this is where the market's presently trading. If we crash, you hit the bump, okay, and you have risk reduction all the way to 325. Okay, we reduce your risk all the way down to 325. You realize the market's almost at 400. To get down to 325, how significant of a move. This is not the full Monty. I'm not showing you everything. All I'm trying to do is emphasize that you have risk reduction. I'm also going to show you the fact that, let me come in here and hit reset slices. Okay, there's a really cool fact. Look at this. That's where I would start to lose money. Okay, when I say start to lose money, it's about 326. So I'm just going to show you the marketplace would have to crash by the amount of 18% from where it presently is. The market would have to crash another 18% for you to start to lose money. Could you get out of some of the positions before we actually crash by 18%? Of course you could. Okay. Well, listen, this seems like the first time you see this, it like looks complex. This is actually one trade. It can actually be placed all as one trade. Okay. I don't want you to focus on that. I want to focus on the fact that you have risk reduction. Okay, I'm not going to leave you out there naked, and it's critical. And this is why you want to use inflection point spreads. And again, the first time people see this, they go, what about margin? I just showed you the margin is going to be negligible. Premium can now be sold in accounts even under $5,000. You're not going to have a huge amount of capital in the account to do this. Okay, this produces an incredible amount of theta decay, which is decay in your favor. You can use this strategy to enhance existing positions. Listen, I'm not going to tell you don't ever trade stock again. Stock is dangerous though right now, but if you have stock positions, why not learn how to sell premium against existing positions using the inflection point logic? Okay, provides an incredibly high probability of success. Like 95% of these trades are just closed out profitably. You never need to buy or sell the stock. You'll never use a stop order, and you can be completely wrong on market direction and still produce profitable trades. Listen, I sold a call yesterday. Okay, does that have a directional bias? Well, it's bearish. Well, guess what? We got a bearish move today. Oh, I'm golden, except that I've also sold puts. So what am I? Okay, I'm neutral. I could be wrong about market direction. And I'm telling you right now that you need this in your life. Again, the buck stops here. I can show you the trade all day long. Okay, but I think what's more important is you actually get to see the trades in motion. Like everything that I do, every execution, when I say execution, when I trade, you can see the trades. right? When I trade, you can see the trade. And that's why you need this in your life. Listen, inflection point trades could potentially bring in consistent returns while minimizing your risk. You just can't let this evade you, meaning like, how hard is this? And people try to make this much more difficult in their head than it needs to be, okay? Here's the entire system. You go out and you look at this as a distribution curve. And again, I'm going to draw that a little bit better. You go out and look at this as a distribution curve. Market's at 400. I want to sell junk here. I want to sell junk here. I want to reduce risk. I want to reduce risk. Done. Okay. What else do you need to know? You have to know exactly what options to trade. Okay. You have to know how many of these little hedges. This is what we call an inside hedge. How many hedges do I need for how much premium can I sell? Right? Take a look at my account. I don't mind showing you every detail of this. Look carefully. All right. At this account, there's another account in here. Okay. And I love showing this one because this is not meant to confuse you. I want to show you what you can build, right? What can I build? Like, what has he done here? Exactly what I've done. Right here, that's a 7-lot hedge against a 10-lot naked short, against a 5-lot naked short, against 2 5-lot of calls. I'm up 35 and 75% respectively. The puts, even in the midst of a huge down move, the puts are still making money. But it doesn't matter if the puts are making money or not. I am hedged, and I have 7 hedges on to 15 naked short positions. I am gold. This position, okay, just this one position. This is not a big position. It's up $3,000 since inception. Okay, there's no if, and, or but about it. That's it. Okay, that's what I'm up. And I'll show you every single trade that I've done. By the way, I'm going to show you every single trade I've done. In fact, if you want to learn how to do this, I'm going to discuss criteria in a minute. Before I get to criteria, here are a few live trading examples. Variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account. You can also do this inside of a retirement account. All I'm going to do is scroll. Okay, I'm just going to scroll real quick through tons of trades that I've done. These are trades that I actually did specifically. I started this on thinkorswim and then kind of moved over to Tastyworks. But this is inflection point trade alerts. Okay, and you go, what do you mean they're trade alerts? These are trades that I've done, and each one of these has gone into a portfolio where our clientele can see these, right? We also have, when I say trade alerts, okay, we have a mobile app, and let me just pull it up on here, okay? We have a mobile application. In that mobile application, all the alerts can come up over here. So you can see every single alert when we do trades. We also do text alerts. We do email alerts. You name it, we have it. I just want to scroll through just so you guys see this started, okay, in January of 2021. That's when I started a real definitive inflection point trade alert track record for TheoTrade clientele. Okay, I'm just scrolling through in all the different trades that I've done. And you can see the returns are always about 50%. Okay, listen to me, there's a handful of losing trades. There's a 19% loss in here. There's a handful of losing trades because quite frankly, in the last 18 months, it's been pretty much a cakewalk. The volatility has been helping us a dramatic amount. We have some close scares in here, and I'm just scrolling through right now. And by the way, the more experience you get, okay, you can start upping and going to the ES. The ES is a much bigger contract. And then the more experience you get, you can actually up the learning curve a little bit more and start using things like what we call Christmas tree spreads. Okay, and you'll see some Christmas trees. There's a Christmas tree spread in here. The Christmas tree spread, when I say up the food chain, this thing can make a lot more capital. It's a ratio type spread. It's basically, this is an advanced version of an inflection point. Okay. All of these, though, are using the exact same logic. All of them are returning right around 50%. Okay, it's like clockwork, right? And again, I'm just scrolling through. This is now, we're into 2022. Okay, a couple more trades. And then I'm also going to take you into a live portfolio. Okay, so another Christmas tree spread in here. I know it doesn't seem all that exciting. Okay, but this is what people want to do. Like, this is, I mean, what you want to do. When I say I'll take you into a live portfolio, okay, I'm actually going to bring you specifically into, okay, the Theo Theta portfolio. So let's see if I can actually open this up right now. Oh, don't. Okay, I already logged in. I have to log back into the site, and I'm actually going to bring it up, okay, on here. So with that, let's come in here and make sure that we're good. I'm going to log out and log back in. All right. So welcome to Theo. This is actually the TheoTrade site. You're actually in the members home. Okay. I'm going to go over to portfolios. We have the Ultima Theo Theta portfolio. And that's the portfolio that I'm actually referencing right now. We have open trades. Okay. All the open trades and closed trades. One of the coolest things is you can actually even copy. Okay. You can copy and paste some of these trades, but it has every single trade. By the way, this one is 4,800 call. I just put that in the portfolio yesterday. It's been closed. I just want to show you every single trade, okay, is done in here. As I showed you a moment ago in this PowerPoint, the PowerPoint kind of just cuts off after May, okay? I know, I just basically said, hey, you know what? I'm just going to show you the actual portfolio. This is every single trade, okay, that we've done recently. And again, I can go back different pages in here, but you can see every trade opened, rolled, closed, all of it, every hedging, okay? All the closed trades, sold a vertical for $73. That was actually a hedge. Okay. Look, bought this back for 475, bought this one back for 650, 650, 550, 650. Okay. These are all profitable trades. There's nothing in recently that has actually taken a hit. Okay. We even had a profitable hedge in this particular portfolio. It's been phenomenal. And again, this is not sitting here trading throughout the course of every single day. I go out, I sell some premium. Okay, we shoot the text message out. We shoot the, if you can't get text message, that's fine. We actually have an app. That app can actually be hit by a push notification, and or we even have now email. So everything happens basically, okay, in threes. We send out a text, a push notification, and an email to every one of the trades. Trade results that we're doing over here for part-timers. And you should know, every inflection point trade that we're doing here, okay, especially what we term, this is the Theo Theta, and I'll come into a different portfolio here. Okay, there's a Theo Theta, what we term small portfolio. The small portfolio, this is designed expressly for accounts anywhere from $2,000 to $5,000. Okay, this is a smaller portfolio. There's no if, and, or but about it. Okay, over here on thinkorswim, this is the Theo Theta big boy portfolio. That's what I call it. Okay, you have access to all of them. So no time, no problem. Okay, we got you covered over here. This is what you need for a challenging market. You're going to learn a new skill set that'll last a lifetime. You can use inflection point spreads to offset some of the inflationary risks, get on the right side of the markets and learn a new skill set. Volatility is not about survival. It's about thriving inside of the chaos here. Again, what our members are saying, this comes back February. Jim, I agree. There are many people here who make the cost of TheoTrade annual membership nearly every trading day. Okay, TheoTrade is the best by far. I'll be with them for the rest of my trading career, no questions asked. Okay, this comes from Thomas. Okay, I'm up since 80K since January 1st, 2022. I mean, pretty much enough said about this. Okay, so no puts before this big downturn because you cautioned us about it. Right, so you guys are great. Comes from Tom. Listen, characteristics of inflection point trading. The attributes of this strategy are undeniable. So you never have to buy or sell the stock. The risk you can actually fine tune to your comfort level. Now, again, I can actually give you, like, if you have a $10,000 account, I'll tell you how many contracts to do. Okay, you're never going to need a stop order. You can vary time frames and further minimize risk. The probability of profitability is high. It's also a perfect strategy to enhance one's stock portfolio, but it's an excellent tool for those seeking to build returns in an account. I mean, listen, first and foremost, this is designed, okay, to be an income generation tool. And new products now allow for the sale of options in nearly any account size. So there's never going to be an excuse anymore like, I can't do this trade or I can't do that trade. Anybody can do any trade they want. And we actually will send you the text message with the right product to trade. Like, I'm not gonna sugarcoat this. You got to look at it. You got to watch a class to learn how to do this. After you watch the class to learn how to do this, okay, don't think it's that painful. We're going to go out and I want you to be able to, like, hold somebody's hand. Nobody goes out there and is like, whoa, I'm a trader overnight. Okay, watch a class, got to learn how to do this. You're going to learn how to build a portfolio of options. Do not let the option side of this business intimidate you. Inflection point spreads can initially be done for minimal credits and minimal risk, but the sale of premium, okay, sale of premium is like this massive power saw. We're going to show you how to use it correctly. Listen, options are the quickest, the fastest, the safest, the easiest way to get where you want to go in this marketplace. But if you don't know how to utilize options correctly, you're going to lop off a couple of fingers. Like, everybody can go out and can sell inflection point spreads, okay? And you're going to need these strategies for the foreseeable market future. And by the way, I don't say that for my own benefit. I mean, in all seriousness, what else are you going to do in this market? Okay. And I'm not, I'm not trying to be facetious in asking that question. What else can you do in this marketplace? You're going to sell premium. Oh, we're smashing through lows. You're going to sell premium. You're going to reduce risk. You're going to get back. Okay. So you're not sitting rocking underneath your desk in a couple of days. Like, this is the kind of day that this is going to get serious. And I'm telling you right now, I'm going to go from here in just a moment. I'm going to go live inside of TheoTrade and update, clientele on what to do over here. Listen, okay. What we do here at TheoTrade is not just say, oh, this is an inflection point, spread. Okay. We build detailed recipes for every strategy. Okay. Specifically, we're talking today about inflection point spreads. When I talk about recipes, you wouldn't bake a cake without a recipe. So why do people trade without one? We're going to give you a highly detailed recipe for being able to put these trades on, how to take them off, okay? What to do if the market goes down? What do I do if it goes up? What if, expiration? Listen, this right here, this is what you need to know to successfully trade inflection point spreads for a living. You got to know what underlying stocks or indices are going to make the best inflection point spread candidates. What are some of the best candidates? You saw them. Okay, you could use spiders, you can use the micros, you can do, the S&P options and futures. I mean, it depends, okay, what you're comfortable with. But I'm going to tell you what really makes the best candidate. It depends on the volatility. It depends on the volatility. Too much volatility, you're dead. You're never going to hear me talk about like, hey, let's trade GameStop. You're dead. You can't make money in those products. The market making side of the business has these massive advantages over you. And you go, okay, let's trade Walmart. And I go, no, you're already dead. There's too little volatility in there. Got to have a sweet spot. Then we get into what expiration do I select? Look at an option chain lately. Look at an option chain. my favorite right now. Okay, look at this. There's 1, 3, 6 day. But have you guys seen lately the SPX, the mother of all products? Look at this. It takes like 10 minutes to pull an option chain because there's daily expirations. There's even 2 expirations this Friday. Look how many expirations there are. Okay, look at it. It's disastrous right now. Do I sell the 94 day, the 93 day, the 108 day, the 128 day, maybe the 78 day set, hut, hike? Which one, okay, do you embark upon? Where are you going to go out and sell that premium over here? We're going to dial in, okay? We're going to dial in not only the volatility, we're going to dial in the expiration, and we're going to dial in of what options specifically you should sell. We'll give you the right probability, okay, the right position. Well, then we have to tell you which options to buy against your position. That's the hedge. How do you build the position? What I mean by how do you build the position is it's really nice to say like, hey, wait a second. I'm going to go out and I'm going to sell stuff here and I'm going to sell stuff here. Okay. But how do I hedge? Like, what do I select these hedges for? Okay. I have hedge to the upside, a hedge to the downside. What if we crash? What if we go up? Every variable has to be covered. Every variable. Okay. Do I need a large amount of capital to do this? Absolutely not. What's the right amount of risk for me? Based on account size, we're going to help you dial in risk. Okay. Everybody's a little different. Some people are a little gun shy. You can start this with $2,000 in the account just to get your feet wet. Okay. Premium selling. Okay. You need an appetite to go out there and say, I'm going to sell something and get back. Okay. And you're not going to do very much. Premium selling is like, it's like flying an airplane. You go out, okay, you get into the airplane, and once you're in the air, okay, there's a whole lot of boredom. Like 95% of flying an airplane is just sitting there going, what am I going to do? What am I going to do? And the other 5% of the time, you're like, hedge, reduce risk, reduce risk. Okay, that's what we help you do. That's where we're at. What are the percentage returns supposed to be? I'm going to tell you right now, it's 50%. Okay, how do I protect myself from market crashes when selling options? We show you that. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading. Trading is all about what ifs. What might be a good stock or ETF candidate? What's the correct option expiration cycle? How much capital do I commit to generating this premium? Okay, what strike options do I sell? How many strike options do I buy? How can I limit my risk? Okay, it's all in there. We build a recipe with definitive criteria. These are checklists. A moment ago, I was talking about an aircraft. The whole idea of our criteria here at TheoTrade, the whole entire idea of the criteria is checklists, just like a pilot would do. Okay, a pilot, they get into a 737. Okay, what do? Just 737, throttle up and take off? Of course not. okay, they sit there and they go through these highly detailed checklists, right? And look at all the different variables, okay? Is this working? Is this working? Is volatility where it's supposed to be, okay? Which puts am I actually looking to sell? How much capital do I have in my account versus what's my overall risk in here? Those are the kind of variables that you're going to encounter. But I'm going to tell you right now, that's just getting into the trade. Getting into the trade is pretty easy. I'm going to go out there and I'm going to text you a trade. Boom, you're in, baby. Okay, in fact, I'm going to do a trade today. So I go out there and I put this trade on. Then what can happen? Okay, what can happen? The market can crash. The market can rally. Dividends are coming. Expiration is coming. All of a sudden, oh my, there's so many different variables out there. We have an answer for all of them. Okay. TheoTrade has the answers to your questions to give it the right probability. How many option contracts? When do you close the premium sell? What if you sell off big? Do I bail out of the trade? What if we rally massively? Can I fix a losing position? This becomes about how, when, why, at what price. And I'm telling you right now, people, this is just the beginning of the variables you're going to face while trading inflection point spreads for a living. You can read about inflection point spreads. I'll tell you right now, you can Google selling options. 10,000 pages will come up in 0.3 seconds. You get 10,000 pages in selling premium. You might even know how to build a few trades. That's not what this is about. This is about you needing TheoTrade's recipe for success, 20 plus years of trading experience. That's just me. That doesn't include the 7 other full-time instructors here, which I put a huge amount of weight, okay, here at TheoTrade. I had access to client order flow for 15 years. We know where people go right and where people go wrong. I've viewed and studied millions of trading accounts and ran education, okay, both at thinkorswim and TD Ameritrade. We have the largest option order flow in the industry, okay? That's where criteria comes from, and criteria is your recipe for success, okay? The following strategy and the corresponding criteria requires the utmost attention to detail. I tell people, okay, no matter how long you've been doing this, the pilot still gets into the aircraft after 20 years and goes through the checklist. You're no different, okay? You can trade for 20 years. Do you still go through the checklist? I do. I absolutely do. Okay. Do I have the checklist up here? Yeah, predominantly I do. But we spent years fine tuning this trade setup and this criteria. And when you approach the section, okay, on criteria, you follow a step to be able to build the trade. Okay. We built a 4-hour course on the inflection point trading system. I'll throw it out there right now. We are not another class for 500 bucks. So I'm going to explain what we do here at TheoTrade momentarily. Let me explain though, okay, what the inflection point trading system is and what the class is. And then I want to explain everything about TheoTrade. Okay, first of all, the inflection point trading system is a class, it's ready to go. It is archived, it is available immediately for streaming. We do that so that people don't have any downtime, meaning that I record this at an off time, we clean it up, okay, make it beautiful, and you can stream it 24/7, just like you would stream Netflix. You can stream it onto any mobile device, okay? You can even on your mobile device, play it back at 1.5 or 2 times the speed. You can even download the course onto your mobile device, or, okay, you can actually just stream it off of your main computer. If you have a laptop, that's fine. Okay, we have an app for iOS and Android. The class slide deck that includes all of the entry and exit criteria, okay, is available immediately for download. Any one of you today, okay, you can hop into TheoTrade, start streaming the class. You can hop into TheoTrade, start receiving text messages for trades literally today. But before I go any further, as I said a moment ago, and like one of the things that's important to me, and I'll talk about price here in just a second, and I'll talk about, we do not sell classes anymore at TheoTrade. Like this, you're like, well, this is a class and it's for sale. It's not what we're about. TheoTrade is all encompassing. I like to tell people this. So I started in the retail side of this business, retail meaning, on the brokerage side of the business. I started on the retail side of the business in 2001. Before that, I was just in the professional side of trade. But I have seen everything from 2001 until today. It's over 20 years of watching this entire industry. And all these classes, they go out there and what do? Classes go out there, they sell something to you for 500 bucks, then they make you buy an indicator for 500 bucks. Before you know it, this is obsolete. You have to buy a class at 500 bucks to buy an indicator for 500 bucks. That becomes obsolete and you just keep going around the circle, okay? Listen to me, TheoTrade, okay? As I said this before, but I'm going to explain it in more detail. TheoTrade's all encompassing. We do not allow you just to take a class, give you a pat on the butt and say, get out of here and go make some money, okay? We provide you everything you're going to need to trade, okay? Everything to support you. How about this? After going through some of the courses here, okay? And we have basic courses, but after going through the courses here, if you would like, email me directly. And don't think for a second that, no, Don's not really gonna answer the email. Of course I will, okay? I answer a couple hours email a day. What else am I gonna do? I sit here, I trade, answer some emails, trade some more. Actually sparks a lot of new ideas for me too, kind of like it. We go out there, okay? We put you through coursework, okay? After we put you through coursework, then, all right, we actually start texting you out trades. We are live all day, every day to not only be able to answer questions, but to give you a feel, okay, of effectively what's going on in today's marketplace. And I stress this to you, this is TheoTrade, okay? You're like, I don't even know where to start. See that start here menu right there? Start here, options 101, options 201. How about we give you access to all of this from day one, okay? That's all part of TheoTrade, okay? But you know what? Any time of the day, if you need support, any time of the day, you wanna know what this is? This is live, okay? And when you say live, yeah, no, this is live. He's trading right here, right now, okay? Live.
Luxury of doing that.
Okay, so this is Tony Rago. He's trading on an intraday basis, okay? All of these, all right? All of these right now are literally, okay, clientele talking to one another. You get access to this. You get access to all the portfolios that we have. Okay, there's independent portfolios. You get access to all of the archives that we've had in the past. You go, what do you mean? Okay, if you want to see classes here at TheoTrade, right? We have option classes, option newbies, technical analysis. How about you get access to all of this? You go, how many classes are in here? Hundreds. Okay, this is just the options classes. Inflection point, income accelerator, Ultima, okay? Gamma irons. We're going to give you access to this today, now, okay? Why? Because it's all part of TheoTrade. What we built at TheoTrade, okay, is like a Netflix for trading, but at the same time, we have all these portfolios that you can follow. It depends on the genre of trade that you like. Today, expressly, you should use inflection point trade. Every one of you should, okay? I don't, no hesitation, no if and or but about it, okay? And I'm going to tell you exactly what we do today, all right? If you go in here and you enroll today, it's $297. There's no if and or but about it. And I want to make sure everybody understands this. It's not $497. It's $297. You go, what's $297? That gives you 3 full months of access to everything that we do. What is it after 3 months? $297. By the way, it's $297. It's a one-time fee. It is not a membership. We will never bill you again. If after 3 months you want to do it again, you pay $297. You go, well, what's the catch? There's no catch. We don't do that. We have 6,000 members on here. Okay, we've been doing this a while now. Okay, TheoTrade has now been around since 2016. Again, I left TD Ameritrade in 2015. We got the crew in place. Everybody else kind of staggered out and left pretty much right after me in 2015. We launched in 2016. You get access to everything that we've done. And again, I put a huge amount of weight in just as support. Do you realize over the next 3 months, if you just emailed me a couple of times, think it's not worth $297, who else are you going to bounce ideas off of? You're going to get yourself into a crappy position one day. You got nobody to talk to. Okay, that's a big portion of what we do is support. Anyway, I'm actually going to give you the whole lowdown about what we give you at TheoTrade. Here's the inflection point spread curriculum. You're going to learn to sell premium in that 4 hours. You're going to create a high probability position and generate monthly returns. Okay. You're going to discover how to hedge existing positions in extreme environments. Today is an extreme environment. You can still hedge. You're going to actually see detailed criteria for inflection point spreads that are going to keep your risk to a minimum. You're going to learn to analyze the inflection point spread, so you're never going to be caught off guard by risk in any market condition. And you're going to see how to trade inflection point spreads, okay, and safely allocate for any account size. In addition to it, and again, I'll make this totally clear, in addition to this, okay, there's a money back guarantee. It's 90 days. So you literally pay $297, $297, okay, 90-day money back guarantee anytime. Again, you're signing up for 3 months. anytime in the first 3 months. If you want, just get your money back. Listen to me. It's $297. I can't stress this enough, no matter how many times I say it. And yes, I'm watching the markets out of the corner of my eye. Okay. We want people that want to be here. We want people that want to be involved in this industry. We want people that want to trade. Okay. How do we do this for $297? I have no qualms in saying this. We have relationships, okay, with several brokerage firms. Those brokerage firms love us. Why? Because we put the brokerage firms on our website, which helps finance a huge portion of TheoTrade. Bottom line, we can do this at $297 because the brokerage firms, specifically Charles Schwab, which is TD Ameritrade, Tastyworks, Tradier, they love our clientele. Okay, and they help offset a huge amount of the cost of your education. So for $297, by the way, you can use any brokerage firm you so choose. They advertise on our site. They pay for a lot of your education. 3 months, there's a money back guarantee. We want people that want to be here. We want people that want to learn this business. By the way, on the money back guarantee, don't call us. It's support@theotrade.com. Money back guarantee. Email us at any point in time. Say, I want my money back. There's no stipulations. You don't have to do a little dance. You don't have to make a little love. You don't have to get down tonight. This is not like a gym membership where you have to give blood to get out of. We don't even have reoccurring payments, meaning that for $297, after your time is up, you have to actually tell us, I want to do this again. You can go now to theotrade.com/I. I is in igloo, P is in Pete or Peter, T is in Tom. Okay, IPT, theotrade.com/IPT. Okay, I'm going to take you to the site and then I'm going to give you everything that's included here. So it's theotrade.com/IPT. And as I said, I'm going to take you directly over to the site right now. Okay. All you have to do is come to theotrade.com/IPT. There are 30 riskless spots. When I say 30 riskless spots, we open up 30 spots, okay, at the $297 level. When I say riskless, meaning that you can get your money back at any point in time. You click add to cart. I want to show you one aspect over here on the add to cart. When you click add to cart, please, I urge you, put your phone number in. When you put your phone number in, it automatically enrolls you for text messaging, okay? You can do $297, $149, $100, whatever. Okay, meaning that you can break this up into payments. Again, because some people are like, they're unsure. Their only commitment then is, if you plunk down $297, listen to me, it's $297. Okay, at any point in the next 90 days, if you don't love it, get your money back. As I said, we want people that want to be here, and I stress that constantly. Okay, there's no if, and, or but about it. And again, you can come in here and, if you want to do $149 or even $100, that's fine. Okay. I mean, again, that's completely and utterly up to you and what you're comfortable with. So it's theotrade.com/IPT. And remember, there's a money back guarantee for the first, again, that's for the first 30 people, okay, that join us today. Now, Marianne said, because of Theo, I closed my entire portfolio with profits, 0 loss, I'm all in cash. By the way, I'll just tell you, that wasn't actually today. This was about 3 months ago when the market was tanking and very close to the lows. But I threw this in here because it's important to me. You guys know that. We're not just going to be like, oh, do this and you're on your own, okay? Email us. Again, I get constant emails and that stuff is important to me. By the way, I'm going to answer some questions in here in just a moment. So the bonuses, okay? What is a bonus? As I said a moment ago, like TheoTrade is all encompassing. Everything we do, okay, is given to you today. Everything we do. We go beyond a class or indicator. Like we get that people want everything in one place, okay, to invest, to trade. And by the way, we have investment courses. We have trading courses, okay? We have psychology courses here. That's trading psychology courses. We have tons of technical analysis. I'm not the market technician, okay? And you can't be a jack of all trades in this industry. So what I've done is I am the option geek. Okay, I went out and hired a technical analysis geek. I went out and hired, okay, a fundamentalist geek. I went out and hired an intraday trader. I went out and hired, I go on and on and on. You're going to see all the traders here in just a moment. But, okay, here's what we offer. Bonus number 1, quick start beginner's guide. When I talk about the quick start, the beginner's guide, what this basically is, okay, when you come in here, there's a start here menu. This just takes you through all the basics. Some people are going to come to us and have no experience whatsoever. Well, here you go. Okay, this will get you ramped up. And I'm going to tell you right now, even those of you that are experienced, really experienced, you got to check out the order execution classes that I do. Okay, because that's my baby. I mean, I've been in the brokerage side of the business. I was in there for 15 years. I understand it. So quick start beginner's guide, that's part of you. All right. Bonus number 2, access to over 100 trading classes. As I was saying moments ago, we give you access to everything. So in terms of classes, okay, I go into the archives. In the archive, I come down to the class archive. Okay. Archives are broken into options, option newbies, technical analysis, futures and bonds, okay, even mindset. But options is my baby, so I'm going to show you. You get access to every one of these classes. When? Today. Like if you want to learn a little bit about, for instance, butterflies or a volatility crash course or controlling your risk, okay, it's in here. It's all in here, and we give you access to it immediately. Next in the docket, by the way, here's some of the classes. Next in the docket, we give you an access, okay, to TheoStream. What is TheoStream? It's our chat room. Okay, so let's go back to TheoTrade for a second. What is the chat room? All right, we're just going to go to member home, okay, and then jump over to member chat room. From the member chat room, what is this? It's live, okay? When I say live, this is live. This is Tony Rago, okay? And you can even back this up. It's actually got DVR capabilities. You can go and watch it in HD. You can supersize the screen over here, okay? He is executing upon live trades in a live environment. This goes on for over 6 hours a day. You get access to it. You get access to all the text and push notifications, 5 different portfolios, okay? You get to email us. You can email us anytime you want, all right? That's part of TheoTrade. That's bonus number 3. Here are the instructors: Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman. By the way, Brandon Chapman says CMT. Corey Rosenblum's also a CMT. Jeff Bierman's also a CMT. There are major investment banks that don't have 3 CMTs on staff, okay? I'm gonna tell you right now, we are stacked. Jeff Bierman actually built over half the studies in the thinkorswim charts. He's also a professor of finance at DePaul University. Matt Williamson's a market neutral premium selling. Corey Rosenblum is our resident swing trader. Brandon Chapman, best way to explain him, fusion. Okay, taking macroeconomics, technicals, and fundamentals and fusing them together. Steve Miller, 43-year veteran stock options and futures. Steve actually does our in-house psychology. Tony Rago is our Nasdaq trader. All he trades is Nasdaq futures all day, every day. Blake Young, market profile, futures, currencies, and commodities trader, also former hedge fund manager. This is our crew kind of working from home during COVID. We give you access to all proprietary indicators and scans. Anything we build, next generation squeeze indicator, Quantix, RSI Laguerre, gravity points, auto expected move, SPX expected move. We give you every one of the indicators from day one. It's on our site. Bonus 4. Bonus 4 is the inflection point trading system. It's the portfolio that I was showing you, okay? You get to watch me do every single trade. We also have the TheoTheo small portfolio. And time out for a second. If you cannot get the text messages live, if you can't watch some of the videos, we have a weekly video that comes out on a Friday that updates you on everything I've done, okay, in the previous week. And nothing is like, oh, I need to get in, I need to get in, I need to get out, okay? It just gives you a 12-minute update of everything that I have done. So that's part of it. Here's the inflection point portfolio that I was actually showing you a bit earlier. And here's the update videos. Okay, these update videos, these are 12-minute videos, just inflection point spread update video, take you through everything. Bonus 5, technical analysis toolkit. Okay, there's literally over 21 technical analysis classes here. Okay, bonus 6, the day trading treasure chest, intraday trading with Nasdaq futures, day trading ES. Again, everybody gets access to this. Bonus 7, I would write this down. 5 essential building blocks to successful trading. Okay, with 40-year veteran Steve Miller. This one, okay, this class is worth its weight in gold. I think every single trader should watch it. It's why I always mention it, but you get access to it in bonus number 7. Bonus number 8, the quick start guide to be able to Ultima, which is selling premium. This is for experienced traders. We built a quick start guide, just boom, to jump you in, okay, and to get you selling premium literally right away. This comes from Pat Thank you for your reply. It's much appreciated. TheoTrade is the first educational trading service that I'm actually making a profit with, and one which I can see a pathway to retirement. Regards, Pat. We include everything from classes to coaching to email access to the instructors to the live trading room, indicators and scans, mobile access, everything. We built the Netflix for traders. It's $297 for 3 months. You go to theotrade.com/IPT. Again, I'll go through everything, okay? You know, one thing I didn't even mention, we do new classes, okay? Pretty much every month. We just recently did Z spreads with Blake Young, which has actually been a pretty phenomenal strategy. I think you guys will enjoy it. Go to theotrade.com/, okay, I as in igloo, P as in Peter, T as in Tom, theotrade.com/IPT. I'll reiterate once again, there's a money back guarantee. So any point, by the way, you can even view the classes. You want to view the inflection point spread class, and if you're not thrilled with it, whatever, it's $297. Get your money back. Get into TheoTrade now. We're giving you 30 spots in the TheoTrade riskless deal. And that has to do with a matter of obviously size. We give you unlimited email mentoring. Send us your trades. By the way, please, you can bounce trade ideas off of us. I don't want you to think you can't. If you want to, you can send us an email. You don't have to be like, my sister's roommate's dog has this question about a trade. Like, seriously, come out with it. I've held every brokerage license pretty much imaginable. I've had my Series 3, which is like a futures. I've had Series 4, which is a principal options. I've had my Series 7, which is a broker dealer. I've had my Series 24, which is a principal broker dealer. I've had my Series 66, which is a 63 and a 65 combined, as have almost everybody here at TheoTrade. We know how to answer your questions. Again, the 297 riskless offer has never been available before with inflection point trades and the live portfolios, and it's a no stipulations money back guarantee. Okay, so again, you'll cruise over right to here. It's again, theotrade.com/IPT. I will read off some of the names as your guys are enrolling. I will read off some of the names, just the first name to let you know, okay, that you are enrolled and then you're one of the 30, okay, riskless spots. And when I say riskless spots, we open up 30 spots. The first 30 people that enroll obviously are in at 297, okay, but they get the money back guarantee. And we do that again to give people obviously incentive. We want you to enroll now for it, right? Don't forget, put your phone number in when you are enrolling. It'll enroll you for text messaging. Don't worry, we're not going to send you a million different texts. Okay, we're pretty lenient on the text messaging. Here, my closed year-to-date profit from Ultimate Trades is paid, okay, for my yearly TheoTrade subscription. You get inflection point spreads, quick start guide, over 100 classes. You get access to our chat room. Okay, you know that some places charge you $300 a month just for a chat room. All right, that's part of it. It's $300 for 3 months here. The TheoTheo portfolio give you access to the technical analysis toolkit, okay, day trading treasure chest, mindset mastery, and the quick start guide to Ultima. Okay, by the way, a couple of names are popping in here as you guys are enrolling, and then I'm going to answer some generalized questions here. And again, I apologize if I'm looking over here because I am reading some of the names that are popping in here. Brent N from California, Jeff G from Colorado, okay, Kevin H from Canada, okay, Oren K from Massachusetts, Gerald B from Texas, Mike B from Minnesota, Robert H from Colorado, Scott W from Florida, Dennis K from Florida, Daniel T from Virginia. That's the first batch of names that has just come through. Those are individuals that are enrolled. I have just confirmed. I want to thank each and every one of you as you do enroll. Okay, recognize it takes me about 4 to 5 minutes before I start seeing your names kind of pile in here. So don't panic if if I don't read off your name immediately. I'm going to answer some generalized questions in here, and then I'm going to get to specific questions. Okay. My first 4 trades following exactly the details in your Ultimate class just closed out using GTC. That's good till canceled. Set right after getting into them. It's paid for your class in less than a week. Okay. All right. TheoTrade.com/IPT. By the way, those of you, if you're looking for the expected move indicator, okay, it is found at the bottom of this page, auto expected move. And again, that's the bottom of the TheoTrade.com/IPT. Those of you that are enrolling, you need not download the indicator. All of the indicators are found on our site. All right, let's get to some of the questions in here. And again, I want to go through here. These are general questions, then we're going to get to some specific questions. And I'm kind of just reading through some of the chat room right now. Okay. Wow, wild moves. By the way, we were talking about expected move a second ago. Kind of curious. Want to see something crazy about the expected move? This is the SPX. That line was drawn last Friday. Okay. We're right below it. We're going to come right back to it. We're going to go right back to 39.70 and we're going to sit there. Check this out. Okay. This is what we term expected move. This is what the option market depicts risk to be. So what we're going to do for a portion of the day, we're going to come up here. We're actually going to skirt the line. And then the last half hour of the day will threaten to possibly break off of it. This could be a wild day. Okay. It's not a wild day yet, but it could be, because if you lose that 39.70, okay, sparks are going to fly in this marketplace. All right, onward and upward here. Let me answer some of the generalized questions. Again, there's a couple more names popping in here. As you guys are enrolling, I'll try to read them. People always ask, what do I need to get started? You know, from your side, okay, a laptop, okay, internet connection. I'll be very frank in saying you really don't even need a laptop anymore. Just use an iPad, okay, or any Android tablet. Just so you guys know, like, people constantly ask me, they ask me questions about tech. I am a tech geek. I have every piece of technology imaginable, okay? I do not use a $1,000 expensive iPad. I use the $299 iPad from Walmart. Why? Because I have kids and I buy these after like a year. I just hand it to a child and just move right on. You don't need like a special super secret like a laptop or anything like that, okay? I actually prefer, okay, and I'll even show you, I prefer, and I actually trade extensively off of my iPad. In fact, I absolutely love, okay, Tastyworks has by far and away the best iPad application I have ever seen. Okay, the Tastyworks iPad application is as good as their desktop application. And again, this is one of the reasons that we only charge $297 for this. Tastyworks, Charles Schwab, TD Ameritrade, all of them help actually fund TheoTrade, okay, an effort to build a better trader. I mean, they're in like the business of, they want you to trade, okay? We're not sitting here like, oh, you need to trade. We build them a better client. And that's one of the reasons that, you know, we can do this at $297. Next thing, so you don't need an extensive laptop. You can have a $297 iPad. Next thing, this is not a membership. You know, we don't auto renew or auto bill. We do not like that, okay? I don't like the whole gym membership thing. I don't think a lot of people do. So after 3 months, we ask if you want to do it again. That's it. Nothing more, nothing less. Okay. Number 3, we're now providing TheoTheta weekly updates. So the TheoTheta weekly update is this premium selling portfolio, and it includes, of course, inflection points. By the way, oh, we only touched that line for a second. We're breaking apart already. This is wild. We came back up for 1 second and we're coming back off over here. So we provide you updates. All the moves that I'll make throughout the course of the week are covered. Okay. Number 4, we archive everything. We understand you can't watch live trading throughout each session. Everything is archived. Number 5, we're going to provide you access to TheoTrade Mobile. That would be an iPad, okay, Android. It's totally fine. Like, it doesn't make a difference to us whether you're iOS, whether you're Android. So you get to, you know, with the mobile device, you can view archives at your leisure. You can download them on here. By the way, there's a couple more names that popped in here. Okay, I'm going to butcher the first one. Ishwanan G from California. I apologize if I butchered your name. Randy M from Colorado. Sopak Lim from California. Steve G from Texas. James H from Colorado. Okay. Margaret B from Arizona. We're in Arizona. Okay. Andrew G from California. Okay. Nivred J from Pennsylvania. Just a handful more names that are piling in over here. And again, I'm going to get some specific questions in just a moment from the chat room. Okay. So all right. We give you access to mobile. Add your cell phone number when enrolling. We'll give you text message. Okay. Number 7, you can email us anytime, receive a response within 24 hours. Just one crazy thing about the emails, okay? Don't email me on a Friday with 5 minutes to go to the cash close with a problem, we trade here. Just throwing that out there for you. Sometimes people will send emails at really weird times. They're like, help me right now. And I'm like, hey, listen, we trade. So I always throw the, okay, when I'm emailing back and forth, what happens is I'm now on, I'm on Eastern time, but some of the year I'm on Pacific time. I go back and forth between St. Croix and Scottsdale, Arizona. So I bounce back and forth a little bit here and there. And either I'm answering emails before the market or after the market. Just depends. During the trading day, though, I trade. Okay. Number 8, you're going to gain access to every course we've done in the previous 7 years. Trading classes, coaching, live trading, archives are all searchable. Name and trading topic. We've got an archive on it. Number 9, variations of the trades are available inside of IRAs. We are very retirement account friendly. That's the only reason I threw that in there. Okay. Number 10, we can help you get approved for options at several brokerage firms. Number 11 here, 30 riskless trade spots are available. Okay. Meaning that enroll now. I think we filled up probably about 20 of those particular spots. And of course, get results, take action, enroll for TheoTrade now. There's no risk to anybody that enrolls. And it's one of the most important things to me. I don't want anybody to ever feel pressure. Okay. You enroll for it. You check it out. You love it. Okay. Fantastic. I mean, listen, we've had people come here, get their money back, come back, okay, and never leave, and 5 years later. And we want you, again, we really want people that want to be here. That's one of the most important things to me. Okay, let's answer some specific questions, okay? And we'll kind of wrap things up. Okay, somebody said, what kind of market setup? Anytime? All right, so this one comes from Larry D. What kind of market conditions? Well, right now, Larry D, I'm going to tell you, this is just it. This is absolutely one of the best market conditions I've ever seen. Okay. I mean, by the way, that is the P&L for the day for that account. Let me actually aggregate risk here. Bear with me for a second, people. This is getting crazy in here. But anyway, the fact of the matter is, okay, what you're seeing right now is ideal volatility. Okay. What conditions are not lovely? When the VIX itself starts to get back under the 15 level, okay, you have to shift how you actually reduce risk in the portfolio. So I don't think we're going to have that problem for quite some time. But with VIX, if you were to look at VIX and say, generally speaking, VIX under the 15 level, okay, just so you guys know, we haven't had a VIX under the 15 level now in years. Look back over the last 3 years, okay, it's been a premium selling haven. Pretty much since the onset of COVID, we haven't seen a VIX back under the 15 level. It's been chaos. By the way, up markets are not necessarily bad. Okay, this wicked rally gave us a little bit of a run for our money, but the sell side activity, moves like today, are absolutely phenomenal. Like these moves, you have to understand the move today provides us fuel to want to sell into the volatility. So it's a good time. Okay. Somebody said on average, how many trades a week get texted out? Only 2 to 3. I would say on average, only 2 to 3. I don't want you to think that there's Doug. I don't want you to think there's a ton of trades coming out. We definitely do more trades while live, but we don't text out every single trade. And the reason that we don't text out every trade, not every single trade is going to be quote unquote suitable for the masses. So there's other portfolios you can follow that we don't necessarily text out, but you can get alerts and so forth on those. So 2 to 3 a week. And like stuff like this Walmart trade, it's really a chill trade. That one gets texted out. The TheoTheo small portfolio always gets texted out. Okay. Oh, somebody said it's difficult for me to trade at market open. Okay, so Keith, of the trades that I personally do, I'll close stuff early in the day, but like today, this is my time here in this last hour. In fact, I'm going to hop off here in just a moment and actually execute. Okay, so Greg says, are IPS the same as Ultima? No. Ultima has a different hedging technique than IPS. They're based on the same logic of selling back month premium. So Ultima and IPS, okay, are like, they're like brother and sister, but they have very different hedging methodologies. Like Ultima uses a different hedging logic. And when I say it uses different hedging logic, you can't hedge Ultima right now. You can only hedge with inflection point, all right? Because look at this, the dollar, it's exploding to the upside. Holy smoke. It's getting crazy out there right now. But they are like brother sister kind of strategies based in the same logic of selling premium. totally different ways of hedging. So I do actually appreciate though that question. Okay. Somebody said, do you recommend I go through the ultimate class now? I've done options 102, so 101, 102. So I would say after you go through all the option basics, okay, go through Ultima and then go through inflection point. I think you should look at both of them, okay, because both of them give you more about premium selling. And I know it might take you a few extra hours, but it's worthwhile. I mean, listen, you have access to both of them. You don't have to do it right away. Like if you said, I want to sell premium today, watch the inflection point class. In one day, you can sell premium on there, no questions asked. Okay. All right. How much capital do you need to participate in the big boy portfolio? When you actually step into the bigger portfolio, okay, you don't have to do every single trade that I'm doing in here, but I would say between $20,000 and $25,000 is probably reasonable to go into the big boy portfolio with. Okay, the big boy portfolio, make no two ways about it. There's some times where I'm going to go hog wild in there, and I'm going to fire today. I'm actually going to step up to the plate. By the way, a few more names: Lawrence O from Georgia, Mark K from Texas, Irvin M from Kansas, Jason S from Florida, Book Hung Wong from Singapore. By the way, I opened up the thinkorswim office in Singapore, so really familiar, obviously, with being on the ground in Singapore. I spent a couple of months of my life over there. For those of you that have never taken a trip to Asia, you got to go to Singapore. Singapore is one of the greatest trips I've actually taken there. Keith R from Arizona, Shahad, I'm going to butcher this, Shazad from Wisconsin. I apologize. David P from Nevada. Okay, one or two more questions in here, and I think that we are good to go. So, oh, fantastic. But actually, I think I got most of them. Okay, I want to thank Brian Aponte's actually helping me out. Okay. Yeah, you know what? I'm gonna finish up one more question in here, and it was from Larry again. General market conditions, and look for like a rise, fall, flat. Okay, the bottom line is, inflection point spread doesn't necessarily matter. Inflection point spread is probably one of the most versatile in terms of premium selling pieces of logic. Okay, and just bear with me, an extraordinarily low volatility would lead us to change the hedging methodology from the inflection point spread. Okay, but the logic right now of selling back month premium is a solid one, and that one does not seem to be abating anytime soon. It has to do with structural changes to the marketplace. With that, listen, I want to thank everybody. Robert B from Canada just hopped on there. Fantastic. As I said, it takes about 5 minutes for me to see people enroll. I'm going to jump into the live right now into TheoTrade. I'm actually going to chat into the room a little bit here, and I'm going to execute a few trades. Again, it is just on right now. The S&Ps, if you take a look at the SPX, okay, kind of flirting with a little bit of disaster here at 39.55. There's not too much levels. The S&Ps themselves, okay, if you guys are interested, there is a critical threshold level right here at 39.31. So if we're going to come crashing down today any further, we're going to end up somewhere around 39.31. That would be pretty much the most damage inflicted that you could see to this marketplace. But you're off almost 4% inside of the S&Ps, almost 5% in the Nasdaq. I want to thank everybody for tuning in today. Again, pretty intense marketplace. I'm going to try to execute a few positions into today's close. Have a wonderful afternoon, everybody, and hope to see you in TheoTrade. I'll be live first thing tomorrow morning, possibly even into the close today. So stay tuned on that front. Thanks.